All right. You're live with me. I'm Faye D'Souza. Thank you for joining us. This is now going to be my regular slot where I will go live every day with the attempt to clear things up and be able to bring you some very interesting voices that you can, sort of listen to and help you understand things. Now, here's the thing. A lot of us woke up this morning to information that Brent crude, which is the global crude prices, had actually fallen below zero. And I shared this on my Instagram and my Facebook. And a lot of people wrote back to me saying, what does that even mean? How can the price of crude fall below zero? And what does that mean then for our Indian prices of petrol? What does that mean for the economy? All of those questions, all valid, very, very good questions. So let me just take a look at the current price of crude. It ended in the American markets quite low. And I want to at this point, it was actually the futures trade was at minus $37 a barrel. So effectively, my understanding of what this means is that the people who were selling the crude oil actually paid the people who were buying the crude oil saying, bhai, please lele. Because to save themselves the cost of storing it. Because actually now the cost of storing is more than the price of the oil. So they were just like, okay, I will pay you if you just take this oil. So that effectively is, I think, what it means. But to help us understand that a little clearer, right now we have Ajay Bagga who joins us. Ajay Bagga is a very respected investment advisor. He's run a fund, he's run investments in a bank, and now he's an advisor. Mr. Bagga and I have actually been talking investments now for 2 decades. Mr. Bagga, first of all, thank you for joining us. And here's the question. Have you ever seen crude fall below zero?
Oh, no, never. This is historically the first time ever, Faye, that it has gone below zero. And in fact, I have a friend who works in Chicago in the CME exchange where these contracts are listed. And a few weeks back, they started changing their systems, Faye, because, like in India, we don't have negative prices for stocks. So if
Yes.
tomorrow a stock goes to negative, BSE, NSE won't be able to function. So they started actually coding their systems again. I was talking to my friend last night, and he said, "Yeah, we were ready. It went negative, and we were able to function. Otherwise, there would have been trouble. No commodity ever has gone to negative price. So it was a historic first, Faye."
So what does this mean? I mean, my understanding is that the buyers are actually paying the sellers. But is that what it means when a commodity goes into negative price?
Yeah. So just to explain it, and I will use very broad terms, not decimals. So 100 million barrels a day is the global demand on
Yes.
a steady state basis. Say on January 1, we were at 100 million barrels a day. That was the production, and that used to be consumed as the coronavirus hit China and China started the lockdown, China being the second biggest consumer after US of
Hmm.
oil, the oil price went down globally by about 20%. So instead of 100, we started consuming 80 million barrels a day while we were producing 100. Then Saudi and Russia, who were holding up the prices for the last 3 years by cutting their production, Saudi basically produces about 3 million barrels less than what it can produce. Russia doesn't have too much spare capacity, but it was also holding back about 300,000 barrels. But Saudi was holding 3 million barrels, it was not producing. They met, and the Saudis wanted a further cut, which the Russians said, see, right now, let the demand settle. We are seeing too much demand being destroyed by the coronavirus. Let the demand settle, then we can meet in June. Saudis got angry and they said, no deal means no deal. I am going to flood the market with
Hmm.
crude. They ramped up their production overnight and started sending more crude all over the world. What that has led is an oversupply. Already we were seeing demand going down by
Yeah.
20%. On top of that, the Saudis brought in more supply into the market. So whoever was holding this particular contract, Faye, what you mentioned, the May contract, what we call CL1 May, WTI. What that stands for is it's the front end contract for
Hmm.
the near month.
Hmm.
WTI is West Texas Intermediate. So it's basically an oil price for the US production. uh, it refers to oil which is available in the US.
Yes.
India buys Dubai basket, which is between Brent and WTI, and then there's something called NYMEX, which is again a New York exchange price.
Yes.
Now, WTI price, the till about 3 days back, Faye, it was at $18. And
Hmm.
that contract expires today on April 21st for May delivery. Now, it was at $18. I was holding it. I am a financial trader sitting out of Singapore. I had thought that Saudi, Russia, and America have reached an agreement. They cut down about 10 million barrels production. So earlier production was 100, demand went down to 80. Now they have cut down 10.
Hmm.
So the excess came down to about 10 million barrels a day. So
Yes.
everyone thought oil prices will go up. Oil prices did go up. I bought this contract at $18 or $20. When it started, it was trading at $35. When I went, the peculiarity of this contract is you have to take physical delivery. You
Yes.
can't settle it in cash like a lot of our options work in cash. You have to go and take delivery of this, or they will hold it on your behalf and charge you storage charges till you get rid of it.
Yes.
Now, financial traders, when they went to settle this off, they tried to find somebody. There was no buyer. Everybody's tanks are full. Every ship is full. No country was buying. There's a place called Cushing in Oklahoma where this oil gets temporarily stored. That capacity is about 70 million barrels it can hold.
Hmm.
It
Hmm.
was already holding 55, and it's rising at 7 million barrels a week. So
Yes.
they said, we don't have space, you find somebody. So people started going back, looking around, boss, you just take it off my hands, you can take it free. And in the end, they had to pay $37 for somebody to take it off who can store it wherever they can store it. That was the price settled. Now, is oil at negative price? No.
Hmm.
This particular contract went into negative. The June contract was 33 about 10 days back. Yesterday it went down to 21.
Right.
So will this problem again happen?
So just to put it in a nutshell for our Indian viewers, basically people who had bought a futures contract, which means that I'm hedging on what the price will be next month. So
Yes.
if I think the price is going to go up next month, I will pay you right now saying let's lock the price at this, so that next month you deliver at this price, and there's a cost
Yes.
to that. That's a futures contract. So people who bought those contracts found themselves holding oil that they couldn't afford to store, because storing it obviously costs them money, and that's why the contract then fell below zero.
Yes.
Will this matter? Here are a lot of questions. Let me ask the questions that are coming in right now. Sunil Kumar says, why are we still paying a big price in India? Campco says, does India have large storage capacity? And we'll ask all of these questions one by one. So first question is, this is the kind of time where India can buy large amounts of oil and store it, because this is what costs us a lot of money.
Yes. No, that is true. And you can get June oil at $21. Even going as far as December, you can get
Hmm.
oil at $32. So
Yes.
if I was Indian government, I would be locking in these prices because you're getting very good prices right now. So we work through our three refiners,
Hmm.
HPCL, BPCL, and IOC. And then there are private refiners like Reliance and SR.
Yes.
I would say India should go ahead and lock it. I don't know what is the strategy. Normally, it's very opaque. The Ministry of Petroleum handles this, so we are not privy to it. There has been talk from time to time that India should create a strategic reserve in the Western Ghats. See,
Hmm.
what happens is
But right
normally
now,
you find a cave
yes, right now
and
we don't
you,
have reserves. Right now we
yeah,
have no room to store.
we don't have. We have been talking about it. So one is you just build some tanks and barrels. Those are very small. What the US does it fills up a mountain. It fills up a cave in a mountain which is huge, and you should be able to extract it also. One is to store it, second is to extract it. India has been talking about it, but we don't have
We have it.
capacity right
Okay.
now
So
as such.
will this mean that if the price, let's say at least temporarily, has now fallen to 22 or even lower than that, 18 or zero, if the case may be, will my petrol prices come down, my diesel prices come down, my LPG prices, Mr. Bagga?
See what the government has done so far, they have kept everything in their pocket. And this was a strategy which started with Mr. Jaitley in 2014 when prices came from $130, they fell to $70, $80, and they kept the prices high by increasing the taxes. So there
Hmm.
are a lot of taxes that we pay. Basically, the refiner makes, you can say, a small margin, but most of your price, nearly 50% of your price, say you're paying 80 rupees in Bombay per liter of petrol or 65
Hmm.
for diesel, nearly 50% of that will be pocketed by various governments, the state governments and the central government, both. So what has happened in India is when the prices have gone up, they have passed it on to the customers. When the prices have gone down, the government has kept it as increased taxes, increased revenues to help meet the budgetary requirements.
And it's also very likely now with the kind of pressure that coronavirus and the fight against coronavirus is putting on both state and central government that they will need every extra rupee that they can get. So the odds of, I mean, if you were to predict it, if I were to ask you to predict, the odds of the government passing on any of this benefit at all to customers is going to be close to zero, isn't it?
Yeah, absolutely zero. It has happened in aviation. They have given some relief to aviation. There was a 40% cut, but it is meaningless right now because aviation demand is down 95%. Planes are not flying. If you see our demand, year on year for the first 2 weeks of April, our diesel is down 65%, petrol is down 61%, and aviation is down 94%. So there has been a cut in aviation fuel price because aviation is kept high. Aviation is used in flying the aircraft, and that is kept high to cross subsidize our LPG, which we give at cheaper than production price to households. The subsidized LPG.
Yes. The subsidized LPG is also at 600, 650 rupees, Mr. Bagga. It's not really that cheap
Yeah,
right now. But
yeah.
I must ask you this. Right now, it's not going to hurt us because we're all sitting at home. None of us are actually driving cars. There will be pressure on vegetables. And this is really important for people to understand. People think that fuel prices only affect you when you fill up, when you tank up your car or your SUV or your diesel vehicle. That's not true. Everything that comes to your door comes on a diesel truck. Milk, vegetables, all your foodstuffs, all of it, and all of this adds to the price of this commodity. So if the government were to pass on that relief, it would actually allow relief to a lot of people. Vegetable will become cheaper, milk will become cheaper. And do you think that's something that the government ought to consider?
Well, there are arguments on both sides. I'll first give the government's argument. See,
Yes.
you look at Norway, for example. Norway has huge oil reserves. It keeps its price at the highest level in Europe at about $9 to the gallon. And why are they doing that? Based on that, they have built a $1 trillion sovereign wealth fund. So Norway has the largest fund. It's larger than the Saudi fund, larger than the Singapore fund now. $1 trillion fund, and that they are using for the welfare of all Norwegians and to create renewable sources of energy. When their oil runs out and this revenue stops, they want that they should have a huge surplus available, and they have very nicely done that. For us, it's not actually a surplus, it's helping us meet our budget. The government's thinking is threefold. One, we don't have money, so it's helping. 5 to 6 lakh crores is coming in from the petroleum various duties that the government levies. So it's a huge chunk of government revenues. Second, it helps, it forces people, since we are importing in, we don't produce that much oil. Our oil production is hardly 15% of our requirement.
Hmm.
85% comes from abroad. So by keeping the prices high, we are forcing people to conserve oil usage and also become more productive. Third, it makes renewable energy like solar, like wind, like hydro competitive to this oil price. If oil price fell very low, all your renewable energy projects would become unviable and you would never invest in renewable. So government's view has been for India, solar is the petroleum. You invest in solar, try to build up more renewables, and oil will keep at a high price. That is the government perspective.
Right, let me ask you a couple of other questions. Justin Gonzalez has written in. It's on the same price. Oil prices for shale oil produced by America have gone below zero. India imports from the Gulf. So does that make a difference? This is obviously the American contract, but even the prices coming out of the Gulf have fallen quite drastically, haven't they, Mr. Bagga?
Yeah, our basket is, you can say, the Dubai basket, which is around $14 to $16 right now. It's less than America because you can take the shipping cost out of it. And we have very good refineries, especially Reliance refineries are really state of the art. They can take the toughest crude and process it. So we are able to get very cheap crude and process it because our refineries are pretty advanced. Our relevant price is not Brent or WTI, it is the Dubai basket, which is more relevant to India because they are the largest suppliers to us. Getting oil from US is not so simple for us. It's more for Japanese markets, which are just across the Pacific from California, more relevant for China and North Asia. For reaching India, it's a very long journey when
Hmm.
you're just 2 hours, 3 hours away from the Gulf.
Right.
We are more getting from Dubai. But
So, Kabir,
even shale price, if you
yeah,
see, their
yeah.
cost of production is $50-$60. For breaking even is $50-$60. In Canada, the price went negative because nobody, what Faye, you said earlier, if there is nobody to pick up that physical asset, it's not like a small thing. I can put it in a plane and just send it. You need a pipeline to evacuate it, or you need huge trucks, huge railways. Railways, there have been explosions in China, in Canada.
Mhm. Yeah,
They are not allowing railways to evacuate. So people are not able to send that oil out. They are giving it at negative price. Shale again is suffering because demand is not there. And
hmm,
President Trump has said he will absorb 75 million barrels more into his strategic reserve. But that is again about 7 to 8 days of US production.
yeah,
US is producing 13 per day. So this is more, you're just making people happy. But in 10 days odd, your strategic reserves will be full. So
yeah.
it's more a demand issue that we are facing. And, capping an oil well is not so easy. Oil is gushing out, and for you to then stop it, restart it, it's not like a tap. It takes a lot of engineering to safely put that off and then restart it. So that's why this demand is low, but supply is still coming by, and
Sure.
slowly they are reducing the supply.
Kabir has written in saying, are we buying more because it's a good time? We answered that question. We don't really have the storage to really buy as much as we would want to in order to really stock that. Is India unaffected because of the price? We answered that question as well. The government is very likely to keep the difference because they need the money right now, having to fight COVID and having to look after a lot of people who are out of work. Ashish Alexander, I'm an oil and gas worker. This is a great and informative live stream. Yay, I'm glad you like it. Kudos, he says. If it's possible, okay, so he said if it's possible, keep it as a video. We will keep it as a video on YouTube and we will also put it on Facebook so you can watch it later. R. Kalra, will the fiscal deficit be lower now? This is an interesting question. Now, for people who don't know what a fiscal deficit is, it's the difference between what the government earns and what they spend in the year. Now, all governments are working in the negative normally. They spend more than they earn. But the question is how wide that negative is. We're expecting it to be really, really wide, Mr. Bagga, because of the kind of spending the government is having to do because of COVID. They're looking after people, they're sending ration for free, they're right now bleeding. Also, they're not earning anything because none of us are working, so we're not paying any taxes. Will this oil bonanza mitigate or bring down that sort of fiscal deficit for the government?
Very little of it, because there is no demand also, Faye. Government will make money. Actually, government is losing money year on year on oil now because we are not consuming as much. As I said, aviation, which is the most lucrative, is down 94% year on year. So 94% your taxes are gone. uh, your petrol and diesel are down 60 to 65%. Your refining capacity is being underutilized by 30%. So, a lot of our refiners bring in crude oil, which is in a crude form. They refine it into various products: petroleum, diesel, aviation, spirit, motor oil, distillates, all kinds of petchem products are made. Now that capacity is down 30%. So all the taxes on that have also gone. So government will have a very severe under performance on the tax front. This will not add much. In fact, right now it's negative because none of us are driving. Whole of India is in a shutdown mode, and we are consuming nearly 60% less oil. So you can, on a rough estimate, government revenues on oil are down 60% year on year.
Mr. Bagga, interesting question from Ashish Alexander. He says, any predictions on how the oil and gas industry is going to change post COVID? And I suspect he's referring to the Indian industry. Now, obviously, we don't have oil in India except for some gas reserves off the coast of Andhra Pradesh. We refine oil and we distribute oil. So there's the guys who refine it, which is ONGC and RIL, and those who distribute, which is BPCL and HPCL, from where we buy our petrol. How will this change? Do you expect any change in these companies?
See, it's becoming a buyer's market, so it's good for us to that extent that there is a huge oversupply. Otherwise, we had to go with a begging bowl and talk to the Saudis that give us some cheap oil, and they would give us the worst, what is called the SAR, SOUR, the toughest ones. And Reliance made a remarkable refinery. Even SR refinery was very advanced, which could still process those. So it's a buyer's market. Uh, I would say, if I was sitting in government, finances allowing it, I would just go ahead and book it because these are historic lows. I'll give
Mm.
you one more interesting ratio, Faye. If we have time, if I can take a minute,
Please,
I would
please.
like to share one secret with everybody.
Please go ahead.
Okay. So, we have this ratio that we monitor, which gives us a very good idea where oil should be heading. And that is basically how many barrels of oil equals to 1 ounce of gold. So,
Okay.
yeah. So, historically, about 14.8 barrels of oil are equal to 1 ounce of gold.
Yes.
14.8 on average would make one ounce of gold. In 1929, in the Great Crisis, in the Great Depression, it went to 30 barrels equal to 1 ounce of gold.
Mm.
It has stayed between 20 to 30 for the last 50 odd years. And guess how much it went? You can calculate it at $18 when gold is 1700. You're
Mm.
nearly 100 barrels of oil started making 1 ounce of
One
gold.
ounce of gold. Yes.
So oil is hugely oversold. Oil is at its historic lowest level. If I was any consuming government like Japan, China, India, I would be buying up as much oil as I can get. And if
Mm.
I was a producer, I would be trying to store it. So they are taking capacity in super tankers, which can store huge megatons of oil, and they're keeping them on the high seas because they know eventually price will come up. If you see the futures graph also, May has gone negative, but June is at $21. December, even today, is at $32. So the
Yeah.
market is expecting economies will come back, demand will come back. This is probably the lowest level of oil you will see for the next few years. It's a good time to grab. I mean, $14, $16, you're getting Dubai crude. Buy as much as you can, contract as much as you can. They will also not give you 1 year contracts because they also understand pricing, but
Yes.
at least try and
Buy.
buy more today and
Hmm.
corner more and build a strategic reserve. That's
But
my secret, which I wanted to share with everybody.
well, he also made me check the gold prices in India right now. Gold is at 47,327 per tola. It's an unbelievable price of gold. I mean, 47,000 rupees. I don't know who's buying right now. It's certainly not the people who normally buy an Akshay Tritiya because they're all at home. But somehow the price has still moved up. Interesting questions. Obviously, a stock question would come if Ajay Bagga is on the show. Himanshu Yadav, what will happen to the oil and gas stocks value in the future? I'm assuming that this is good for a Reliance or an ONGC, isn't it? If they can store, assuming they can store.
See, right now we just don't understand it. The refiners will have inventory losses because the gold price has gone down, the oil price has gone down from Jan to March. So whoever was holding inventory, suppose they bought crude at $40, and
Mhm.
today, it's gone to $18 in the international market.
Yes.
They are going to make a huge loss. Yesterday, we had a case of a Singapore trading firm which was hiding its losses, and it seems that some Indian banks had exposure to them. So, more and more, what the bear market does is it exposes all the accounting frauds in the system and all
Hmm.
the accounting jugglery that comes out in a bear market. So, expect more bankruptcies in the US because they were borrowing the average leverage. What is leverage? If you have 1 rupee, you go and borrow against that 1 rupee. Average leverage of the US shale gas was 6 is to 1. Those junk bonds is what the Fed went in and bought because they wanted to save the industry. They first time in their history they went and bought those junk bonds in the open market to save those issuers and the banks who were holding them. Now there will be a lot of bankruptcies in oil at this price. Countries are going bankrupt. If you look at Russia, its budget is balanced at about $46 price.
Hmm.
Iran's budget balances at $130 price. Saudi's budget balances as $80 to the barrel. Saudi production is the cheapest. They produced at $7 to $8 a barrel. Their budget balances at $80. Only if they sell at $80 will they balance. So they
Yes.
are eating their reserves right now in
Hmm.
keeping their welfare measures and balance and managing to run their country. So countries go bankrupt, companies go bankrupt in this kind of a scenario. The consumers hardly benefit because the price doesn't get passed on to the consumers.
More questions. Ishita Gupta says, "Are we expecting an oil price war to continue post COVID?" That's one question, and there is another question that's coming from. Let me see. Someone who said that, "Are we planning on?" Yes, Kunal, who has said, "Is there any plan to increase the storage units in India, which is currently at 5.5 MT right now?" We've already talked about that. There's been a lot of talking, but we haven't actually done anything about it. So no, there's no action on it right now. There's always been a plan. But do you expect this price war to continue given where Russia is? And Russia was the one who was actually giving attitude before this whole thing started. They refused to sit down with Saudi and have that conversation. Given where everybody is right now, are they going to continue undercutting each other, or do you think they'll be able to sit down at a table and have a conversation?
I think all are forced to do that. See, US oil employees are 2.5 million. It's a huge constituency for Trump. It's an election year. So US wants it. It doesn't want its shale producers to go bankrupt. It doesn't want oil jobs to go. Right from the oil sector workers to the people who are working in the oil industry directly. 2.5 million jobs are at risk. So Trump wants a deal. Russia miscalculated because they were at $60 and 42, 46 they break even on the budget. Plus, they have built up huge reserves over the last 6 years, which they are holding largely in gold. So they said 1 or 2 years of losses I'll take, but in that time, US shale producers will go bankrupt. So that 13 million daily production of US shale, if it goes off, the world economy will be underfed with oil. Oil will shoot up to 100. I'll make up the money after 3 years. That was the Russian strategic thinking. Saudis was double or quits. They said, okay, Russia, you don't come with me. I'm going to flood the market with very cheap oil. I will beggar you. I will beggar the US shale guys, and I have the capacity to survive because my production cost is just $10. Even at 14, $15, I'm making 50% profit. I will finish you off by having higher production. All three scenarios didn't work out. In fact, 13 congressmen and senators from the US have written to MBS, the Saudi ruler, that we are protecting you militarily and you are bankrupting our core constituency in the south of US, in Texas and Permian Basin and all the places. So please desist and don't have this price war. Will this price war continue? No, all of them are scrambling to see how to reduce production. This is more a demand destruction. 20% is gone. We are expecting this quarter the demand will be down 30% with the global slowdowns that have happened. Nearly 4 billion of humanity is in some kind of a lockdown, and huge industries are just not producing. So nearly 30% of the demand will go off is our reading in this quarter itself. So they are in a deep trouble. We don't expect oil price wars to continue. They will all cooperate to keep the prices higher now, somehow, some way.
We have questions from Devendra Makode, who says, how can the common man use this price fall? And Keith Di Rosario says, is this hinting at a depression? Keith, quite
Yeah,
honestly, it's not a hint anymore. This is
it's
a
not.
blue
Yeah, yeah, yeah.
of the
See,
depression.
China, which used to grow at 6%, gave a minus 6.8% for the first quarter. IMF numbers are out that US will be minus 3% for the whole year. Europe will be minus 3, Japan will be minus 4, China
Hmm.
will be 1 or 2%, India will be 2% for the whole year. Uh, Closer home, analysts are saying India will probably see negative growth for this financial year, started April. Till March, till 24th March, we were still working. So, March, you will not see that much of an impact. But come April, it just falls off a cliff,
Yeah.
especially March 24th, when the lockdown started, 75% of India's economy got shut down. 25% only was working, out of which 17% is the farm economy, which
Yeah.
is low productivity. As of April 20th, with the relaxations, about 40 to 50% of our economy should have come back on stream. But remember, we are still only functioning at 50% of our capacity, and we were using only 70% of our
Hmm.
capacity anyways. Even when we were working at 100% production, we were only using 70% of our actual capacity. If a factory could make 100 cars, we were making 70 cars earlier. Now we are making zero cars.
Yeah.
So see that thing. Impact already is 20 lakh crores of lost production in India. How much more will it go? Nobody knows. Who's
Hmm.
hurting the most? It's the small businesses, shops, small businesses, sectors like malls, real estate, restaurants, hospitality, tourism, travel, airports, aviation, airline companies, all kinds of transport companies. Everybody's in a very deep trouble. What do you need now? RBI has done its bit. 2 lakh crores of stimulus already put in, liquidity put in, rates cuts done, asking banks not to ask people for interest payments, waiving interest and principal for 3 months, though you will have to pay after 3 months the
Yeah.
full amounts. RBI has done its bit. What we are expecting is the government to come out with what's called a fiscal stimulus, something that the government does where it puts money into people's pockets either by cutting taxes or incentivizing consumption or direct benefit transfer to the needy segments, giving some support to some sectors like airlines. Like sugar, we do something every year
Yes.
because the sugar factories take the sugar cane from farmers, and at times the landed cost at which they are forced to sell is more than their
Yes.
sugarcane procurement and production costs.
So
Yes, Faye.
let me read out a couple of more comments. Moez Gilani says, "Thank you for bringing such an intelligent and articulate panelist on your show. You're very welcome." Very.
Thank you. Thank you very much.
We also have a couple of other questions. Josie Matthew, is it possible for the government to make a strategy on the flow of oil all over the ocean at this stage? I'm assuming it's possible. I'm also assuming that all governments are currently preoccupied with fighting COVID. So, how much of planning will go into oil and gas, we don't know yet. We answered Keith's question already. Mo is asking what will it take for the price drop to reach the customer? It would take for the government to cut taxes. We don't expect that to happen right now. A good time, and this is the last question I'm going to take, a question on renewables, and a question at this point that's coming from someone who has said that should we be keeping an eye on or pushing sort of battery or electric cars? Here's the thing: when petrol comes down, people
Yes.
will be less motivated to focus on renewables because this is now easily accessible. Isn't that true?
Absolutely, and especially in countries like US, Europe, where the price is decontrolled. So whatever is the price, it flows through to the customer. So where oil at the peak was $4 to a gallon, now it has reached $1.5 to a gallon. So people can really fill up. Of course, they are in lockdown, so nobody's filling up. But theoretically, people can fill up as much as they want, and they will not go for electric vehicles in that kind of a scenario. However, from a climate change perspective, people are worried. So hybrids and electric vehicles, people like cars like Tesla, they can't produce enough. People still keep buying because there is that segment which is very worried about the climate, and they know these
Yes.
are cleaner cars. So I would reframe that question into another way. Have we reached the peak carbon? I think we have reached the peak carbon because coal fired plants are getting shut down all across
Hmm.
Europe and US, Japan. They're going into renewables. Coal is on its way out, and then oil, we will get more and more productive in using it. And secondly, as electric vehicles become more mass, they will become cheaper. We'll be able to store that energy for longer in more efficient batteries. I think we are just one or two inventions away, and oil will also become irrelevant. Maybe it is 10 to 15 years, those two couple of inventions, which will be an order of magnitude in the battery efficiency. Once that happens, you will not drive an oil car at all. You will use oil for, say, heating purposes or something, or in mega plants to generate electricity somewhere, which takes care of the carbon emission. But on a vehicle by vehicle basis, you will have clean vehicles. It's a 15-year scenario. It won't happen even in the next 5 years.
Well, last question I'm going to take, and someone's asked, what will the size? This is Hiren Gokhani. What stimulus package will India need given the gravity of the situation? Now, as a percentage of the GDP, we've actually not spent that much. We were actually less than a percent compared to a lot of other countries that have gone up to 10%. There's been one estimate, if I'm not mistaken, that we'll need about 10 lakh crore rupees. That's about 5% of our total GDP. Mr. Bagga, do you agree that the Indian government is going to need to spend that kind of money, and do they have access to that kind of money?
We don't have access, so we'll have to print the notes. Basically, the government has the printing press. The risk there is, one, you lose your rating. Hopefully, the rating agencies will see that the whole world is doing that, and
Mhm.
even something like some country like Germany, which used to run balanced budgets, surplus budgets, has spent a lot. So rating agencies will cut us some slack on that, given that it's a one-off case. Uh, you've lost 20 lakh crores of production already. So
Hmm.
even 10 lakhs is less to make up, but you need that kickstart. Otherwise the economy will just be very sluggish. We will have a lot of headwinds. The world will become more protectionist. Your exports will face a lot of headwinds. It will be very difficult for your people to find jobs abroad because everyone will want to create jobs first for their local people. So we are going to face a lot of trouble. And the bottom of pyramid, what Faye already mentioned, who don't have any staying power, and whose ability to earn on a daily basis has got severely compromised. We have to make them with a safety net. We have to give them a safety net. So I would agree. 10 lakh crores is roughly the estimate we are also making. We don't expect it all to come together. We are expecting like a 1.5 lakh stimulus for, say, SME segment, then 1 lakh for this, 1 lakh for that. That's how it will come. Government is very careful in that sense, which is also good in a long-term basis. It's good, but this issue is just too big. You're shutting down the whole country. Then you can't expect that market forces themselves will be able to jumpstart this economy. You will need a huge stimulus package from the government.
All right, we're going to leave it there. Now, normally, I'm a big believer in the fact that the government should pass on benefits of moving oil prices to customers, but I also understand that these are extraordinary times, and the demands on the budget of the government are unlike anything we have seen, at least in modern times. So, in that case, if you and I have to spend a little extra on petrol, so be it. If that means that we can put food and money into the pockets of the poorest in this country, remember, if they go out and buy a little packet of biscuits and they buy, they're able to pay their phone bills and their electricity bills and their water bills, that keeps us all alive. That's really the segment of the market that we should all be looking after at this point, and the government should be looking after as well. So, less diesel in your SUV, more money in the hands of the poorest in this country. That's effectively what we're hoping is going to happen here. Ajay Bagga, thank you so much for spending time with me and answering questions. And I hope that we can have you on this show as often. Lots of very positive responses for Mr. Bagga, as always. So thank you so much, Mr. Bagga. Have a nice day. Stay safe, of course, and stay at home. And our audience is very grateful for your time.
Thank you. Thank you very much.
All right, so we'll be doing this every day at 4 o'clock, and I'll pop it up onto all of my social media handles so you'll find out what the topic is. But walk in at 4 or 4:15 every day, and we'll bring you a conversation about what's happening, and we will take questions from you as they pop up in the chat box. So, thank you for watching.